Hello, this is Julius from Basic Financials. Today, part 5 of a bookkeeping series. Today, I'm going to talk about stock. Stock is quite a crucial part of your trading and can have a huge effect on your results. So it's important to know what to do with it in your accounts. So if you're preparing management accounts or your year-end accounts, how it will have a bearing on your figures. Now, previously we've built up a balance sheet and a profit and loss account in the other videos I've done. It would be a good idea to look at those to get a grip of what's going on with the debits and the credits and customers and suppliers and the nominal ledger. But assuming that you've done that, the example here I'm going to do is slightly different and not really following on. What I'm going to do is, let's assume that you're buying and selling, let's say, I think I've said golf balls. Let's say you're buying and selling golf balls, and you're manufacturing them. So you buy in the equipment, buy in the materials to manufacture these golf balls. Let's say that you buy in materials for say £70,000 over a period of 2 months, and you start manufacturing these golf balls, and after the third month you're then in a position to sell the fully finished product for £100,000. So if you were to ignoring things like your rent and all of that, just concentrating on the gross profit, so there's sales minus the actual direct costs of producing that sale, then you need to be thinking about the flow of how everything's happening. So overall you would have £100,000 sale eventually, and you would have £70,000 cost of sales, i.e. the materials, and you'd have a gross profit of £30,000. But the timing of things is important. Let's say your accounts, just do management accounts for a month, and in your first month you've spent of that £70,000 materials. Let's say you've spent £40,000 to get most of the stuff in. Your profit and loss account at that point would be showing £40,000 in purchases, materials, in the expense in the profit and loss account, but you'd have no income, so you'd have a loss of £40,000. But that's not really very realistic. What you've got actually is, although you've spent that on materials, you've also got those materials sitting in your stock. So hopefully, if there were a problem, you would be able to go and sell those materials back to someone for £40,000. You probably wouldn't, but in theory, let's say you could. So your stock value is £40,000. So what you would do in your profit and loss account, you would have materials as a cost, but straight underneath that you'd have closing stock, £40,000. And this is where we have another journal entry example in your figures, where you need to do the debit and the credit yourself. So you would be debiting in your balance sheet in current assets, a stock account of materials. You'd have stock of materials as an asset in your balance sheet of £40,000, and the other side of the entry, the credit entry, is a closing stock figure in your profit and loss account within the cost of sales part of £40,000. So if you were to look at your profit and loss account, you'd have 0 sales, you'd have cost of sales, you'd have £40,000 materials purchased, but coming off that, you would have closing stock minus 40,000. So your cost of sales would be 0, which would then make the figures look as they really should be for that 1 month. You'd have 0 sales, 0 cost of sales, 0 gross profit, and your balance sheet would have the £40,000 of stock in there. Okay, now let's say we get to month 2 and you've actually spent you've spent all the £70,000. You still haven't made your sale quite yet because you're about to do it, but you haven't quite done it by the end of the month. It's sort of work in progress in the stock. So you spent your £70,000. You would be, so your materials cost would now be showing not £40,000 but £70,000. Your closing stock at this point is still showing at £40,000, but you still want your stock to be £70,000. So you need to do a journal in month 2 to debit your stock to increase the amount with £30,000 and credit the stock in the balance sheet, and credit your closing stock on the profit and loss account with another £30,000. So your debits and credits tie up, and what your balance sheet will now show is stock in the balance sheet and the current assets of £70,000, and your profit and loss account will show cost of sales £70,000 materials bought, closing stock £70,000. So your cost of sales will be zero still. So that built that up. Now, so your management accounts, the only thing you've got in the last 2 months is the change in the stock on the balance sheet. There's no profit and loss account really. Otherwise, but you are showing the materials bought as an expense, but then showing it as a closing stock. So now month 3. 2 or 3 days into month 3, you managed to sell these goods, sell these golf balls for £100,000 to a customer, and so you now have £100,000 in your sales, but you've got no cost of sales because it's showing at zero. We're going to say in month 3 there's no extra costs. I know it's a bit unrealistic, but let's say there's no extra costs. So at the moment, your profit and loss account will show 100,000 sales, materials £70,000, closing stock £70,000, no cost of sales. You've got a profit of £100,000, which isn't right. You want a profit of 30. So what you're going to do, you're going to adjust that closing stock figure. So at the moment, the closing stock figure is £70,000. You need to bring that down to zero because you've got nothing left. So you need to be doing a journal entry to debit the profit and loss account stock of £70,000 to bring it down to zero, and to credit your stock in the balance sheet and current assets with £70,000 to bring that down to zero. So now your balance sheet will have no stock in it, but your profit and loss account will also have no stock in it. So the materials will be there at £70,000. Your closing stock will be zero, so your cost of sales is now £70,000. So your profit and loss account is 100,000 sales, 70,000 cost of sales, i.e. materials and no closing stock, and £30,000 gross profit. Your balance sheet will have no stock in there. Now that shows the build-up of how stock can have a big difference. Obviously, I've just done it over a 3-month period, but you can imagine that when it comes to doing your year-end accounts, there's going to be that cut-off, that's a technical name they call it, where you're doing your accounts up to a date, but there are going to be things like stock that you need to deal with in the way we've just described as at that year-end date and the date you've made your accounts up to. So hopefully that will help a bit with the bookkeeping and how to deal with stock, and it gives a bit more examples of debits and credits and how your balance sheet and profit and loss account are affected. I hope that helps. Like and subscribe please as usual. If you've got any questions on that, or if there's anything you want me to deal with specifically in a bookkeeping topic, then just put some comments in, or that's that, and then I'll see you again soon for another video. Thanks for listening.